Good afternoon, everyone. Ian Purdy, CEO of Paladin Energy. Thanks very much for your time today. It's lovely to be in Toronto. It's a beautiful city. And having been in Saskatoon last week, the weather is glorious as well. What I'd like to do today is just a quick overview of how we've progressed our company over the last 12 months in particular, but more importantly, talk about our future and what our plans are in Canada. 2024 was a defining year for our company. Firstly, we restarted our Langer Heinrich Mine. Langer Heinrich is a mine that we own and operate in Namibia. Namibia is the second best uranium mining jurisdiction in the world, in our opinion, and we see Canada as the best mining jurisdiction in the world for uranium mining. So we're really pleased to be up and running in Namibia. It's a fantastic jurisdiction, it's a wonderful country, and we're progressing the ramp up of our mine. We're about halfway through our ramp up, so we're 12 months in. We restarted the mine this time last year, and it's going really well, and I'll talk more about that. The second defining event for us was the acquisition of the Fission Uranium Corp. I'm sure everyone here is familiar with Fission, the great project they've got at PLS in Saskatchewan. Super high grade, shallow ore body, and one of the best undeveloped uranium ore bodies in the world. So we're really pleased to welcome the Fission team to be part of our company, and also welcome all the Fission shareholders to come on the journey through our TSX listing. So we stand here today, we're a global uranium company with both scale and growth. And there's very few of us in the world. If you look for substantial large uranium companies that have production and a growth pipeline which runs for multi-decades, you can count those companies on one hand. Let's just talk about that pipeline. As I mentioned, we start with our production asset in Namibia. We now have a substantial Canadian hub of assets. Our first priority is the Patterson Lake South project, north of Saskatoon. And then we also have an excellent ore body over in Labrador, the Michelin ore body, which we see as a longer term opportunity after PLS comes to production. We've got some advanced exploration assets in Australia, both on the West Coast and the East Coast. And through our Fission acquisition, we've picked up some fantastic prospective tenements across Athabasca. So we've got the whole spectrum. We've got production today, which gives us exposure to the uranium dynamics that we see today, which are very strong. We've got a development hub here in Canada, which will be our major growth focus for the next decade. And then we have some longer term exploration assets. The Langer Heinrich Mine, as I mentioned, we restarted this time last year, and we're delivering good levels of commercial production. And most importantly, we're selling that product all over the world to our top tier customers, and it's being received and paid for by all of our customers. What's pleasing, this early in the production ramp up, we've managed to sell every pound of production that we've produced under our existing offtakes. And our customers are extremely pleased with our product, as well as the fact that we've come back successfully into operations. So the priorities going forward for Langer Heinrich, ramping up to full production. We're laser focused on that, and we're working diligently to show improvements quarter on quarter. We had a good finish to the December quarter, and we're looking at building onto that momentum during the second half of this year. We're also moving into mining. So at the moment, we're processing historic stockpiles at our processing plant in Namibia, and we'll progressively move across to mining over the next 12 months, which will give us better ore quality, higher grades, and higher level of production. Patterson Lake South, as I mentioned, a fantastic project, some 93.5 million pounds of reserves, incredibly high grade and very, very shallow. We're really pleased to now have the opportunity to work on this project. The Fission team, who have all come on board and joined us, have done a wonderful job. We're very advanced with our environmental approval, and we'll be looking to bring that process to an end, hopefully the second half of this year. We're extremely pleased to have signed two substantial mutual benefits agreements with First Nations. I had the pleasure of spending time with our First Nations representatives in Saskatoon last week, and I took the opportunity to learn more about what was important for the communities, what was important for our neighbours, and I reassured all of our First Nations communities that we will work closely with them and will be very supportive of the Fission team on the ground in Saskatoon, who have developed a great relationship over the last 10 years. So we'll look to move forward our First Nations relationships, we'll look to move forward our environmental approval, and then in the second half of the year, we'll get into serious work with the Canadian Nuclear Safety Commission, and we'll work towards our construction permit. Michelin, a fantastic asset. We've got close to 130 million pounds of resource, NI 43-101 compliant. We've probably moved towards more of a feasibility study with Michelin. We are doing some drilling in and around the existing ore bodies, and we'll move that asset forward so it's ready to be worked on once we complete the PLS project and we have PLS in full commercial production. Just some highlights of our Australian and Canadian exploration portfolio. We have a very large ore body on the east coast of Australia, Mount Isa, close to 150 million pounds. We have an asset on the west coast of Australia, which is an ISR asset, in situ recovery. And then we've got some excellent prospective ground across the Athabasca. Most of our exploration focus will be in and around the PLS deposit. I'm pleased to say that for the first time in many years, we're drilling very close to PLS. We're looking for resource extensions and we're looking for opportunities in parallel with the existing ore body. So you'll see some news coming out about that drilling program as we progress over the next few months. Looking at the uranium market, we're driven by fundamentals. We look at the fundamentals, supply, demand, the long-term market. So for us, we're really pleased with the fundamentals of the uranium market that we've seen come through over the last few years. As you're probably all aware, it's a wonderful energy source, and the world has woken up to how important nuclear energy is. Low carbon emissions, virtually nil, one of the lowest in the world, but more importantly, base energy, 24/7 clean energy, secure baseload energy to decarbonise the world. So there's 440 operating reactors around the world today. They're in all the jurisdictions around the world. There's 65 under construction as we speak, with another few hundred in the planning pipeline. So the demand for uranium that you're seeing today is driven by those 440 reactors and the 65 that are being constructed. We're not looking for new reactors to underpin the demand. That's cream on top. And those new reactors will come through next decade and will further put a squeeze on the uranium market dynamics. We like to look at the whole fuel cycle for our customers. We've seen incredible strength in the enrichment market, where our customers have been very focused. Conversion is also a key area for our customers. And again, you've seen a 500% increase in conversion. And now our customers are turning their attention to their uranium needs. And we've seen a very strong increase in both the spot market and the term market in uranium. And we expect that trend to increase over the next few years. There is fundamentally a supply deficit in uranium. There is just not enough uranium being mined today. So the total mined uranium in the world is circa 135 million pounds to 140, and the total demand of uranium for all the nuclear reactors around the world is close to 200 million pounds per annum. So there's a structural deficit, and at some point, new projects have to come to market. And we think that dynamic will come through very strongly at about the time we're looking to commercially underpin our PLS project in Athabasca. In terms of our contract book, this is all focused on Langer Heinrich, where we're up and operating. Our customers, we've got 11 strong customers. We deal with the largest customers in the market. An interesting fact, those 11 customers account for over 60% of total uranium consumption across the globe. We have fantastic customers in the US, in Europe, in Japan, and in China. 50% of our life of mine production is contracted, but in the first few years, we're very contracted. So we deliver only into our customer contracts. We don't rely on the spot market. And we're very well contracted over the next 2 to 3 years, but then we've left exposure to the market pricing longer term. And what we're doing is we're layering in contracts as we move forward. In terms of our outlook, as I mentioned, really pleased to have returned the Langer Heinrich mine to production. Lots of work to go there, but we're clear on our priorities and we have a clear pathway to full production. Very pleased to have closed the Fission acquisition. As you can see from our growth pipeline, the PL asset fits in very nicely between Langer Heinrich and Michelin. And we're very focused on delivering the development and exploration potential, not only here in Canada, but across our portfolio. And as we always aim to do, we're looking to embed sustainable returns for all of our shareholders, both today and into the future. So I'll stop there, Dave. Thank you very much. And please, questions.
The uranium you're getting out of the stockpile there, are you selling it on the spot or you got a term?
100% sold into our term contracts. So we've made shipments through to the US, to our 6 US customers. We've made shipments to Europe. We deal with the largest nuclear entities in Europe. We've made shipments into China. And in the near term, our product will be going into Japan as well. So it's all under offtakes. We don't deliver our product into the spot market.
But the stockpile you're processing right now, you're probably not getting 2 million pounds out of it?
We've produced close to 2 million pounds in the first half of the year, plus the bit we did last year. And we're targeting 3 to 3.6 million pounds for this fiscal year.
Okay,
thank you.
Any questions? Got lots of time for questions. Okay. Ian, you're a producer delivering uranium the world over. Like you said, those 11 customers you have 60% of the whole capacity or consumption. You know, the spot price has been sliding, but the term price has been fairly strong. What are those customers telling you about uranium pricing? What's their sentiment around pricing?
So we've got a very experienced uranium marketing team. One of our gentlemen who's based in the US has 30 years uranium marketing experience, did a lot of work with Cameco. We have a gentleman in Europe who's got 40 years experience uranium marketing, and we have a very experienced executive in Australia as well. So we talk to our customers every week and we interact with them on a continuous basis. What's interesting, Dave, and you made a very key point here, the term market is very strong and the term market hasn't taken a pause. We're seeing plenty of opportunities for contracting. We don't chase work. We're very comfortable with our contract book, but we look for premium opportunities with very large counterparties. They're coming through quite regularly. We've seen good, steady contracting opportunities out of the US, out of Europe, and as we mentioned, we recently signed our first offtake with a large Japanese utility as well. So a lot of those discussions and those processes are not seen by other companies or by the public because the utilities tend to come to the producers behind closed doors because they don't want it to be publicly known that they're seeking more uranium pounds. So 80% of the conversations we have are not through a formal tender process, but we're seeing very steady demand, and the term market is not being influenced by the spot market at this point in the cycle. So the term market's holding nicely. It's nice and strong and steady. Our view on the spot market, if you look historically, absolutely correlates very closely with the term market. What we've seen at the moment is a little bit of a divergence for a short window of time, and we think that's most likely because there's a little bit of loose material in the spot market at the moment. There's some people who are holding pounds for financial reasons that have been selling those pounds down through basically the spot market. So we understand why the spot market's been soft. Unfortunately for all of our shareholders, it's the most visible part of the market and certainly weighs heavy on our equity valuation. So we're optimistic that the spot price will spring back sometime, hopefully sooner than later, and we will expect it'll revert back to the long-term trend of correlating far closer to the term price. We see a great opportunity. Look, we're not in the business of predicting commodity prices. We just focus on what we can control. But we do think the equity reaction to what is a short-term issue in the spot market certainly has been overdone, in our opinion.
What would you say to investors who are a little concerned about what can happen between Russia and the U.S. in terms of process and any kind of how the uncertainty is causing? How would you address it?
Yeah, thanks for the question. It's a really good question. Firstly, let me say, we have not seen one of our customers or one process out of the US where someone has bought uranium to cover a Russian position. All of our customers are telling us they're not moving on that issue yet. So the first thing I can say with confidence, if that position was reversed for whatever reason, there'd be no impact on contract volumes because we're not seeing those volumes in the market anyway. The second issue is the Russian ban does not have a significant impact on uranium flows or uranium contracting. It's primarily related to enrichment, conversion, and secondary supply. So whilst there will be an impact overall, the impact on uranium will be much, much lower than certainly conversion and enrichment. On the other side of the equation, there are utilities in the US today who are holding back on uranium contracts because they can't secure conversion agreements, and they're trying to secure conversion agreements ahead of contracting in uranium. So it's interesting, if the ban was reversed, in a way it'd actually be good for uranium in the short term because the Russian conversion is important to those US utilities. So look, overall, we think the ban is good for the US, it's good for security supply. We don't expect it to be reversed, but if it was, we don't see it as a major issue from the physical market. Obviously, the equity market will react, but we think from the uranium market, not necessarily as big an impact as people may think.
One last question?
How do a utility company coming and test they are making you offer, trying to get the flow down there on the term?
Sorry, I missed that.
How the utility company coming and making some offer or trying to test how much you can come down on the flow?
Yeah, another good question. So the approach we take to the market is we're very particular, and we're seen as being quite difficult by the utilities. So we've got an excellent contract book, and we're not in a rush. So the feedback we get from the utilities is we tend to be the highest priced in the market and probably the most stubborn to deal with. So we have a very clear sense of what is a good contract, and we're happy to wait for it. We're very, very confident with the mid to long-term uranium supply-demand situation. Extremely confident. So we tend to be very particular. We worked it out the other day. I think for every 6 conversations and processes we have, we generally get one contract. And the other 5 are saying, can you please lower your price? And we just say no. So the utilities do have a choice at the moment. They can choose to take product from a proven producer. And the industry refers to the big 4. There's Cameco, Kazatomprom, Orano, and Paladin. And we're referred to as the big 4. They know they'll get our pounds, and you have to pay for that. You can go to a smaller company that's looking to bring a mine into production. They will offer a discount, but you're not sure you're going to get the pounds. So we don't discount, and we're very comfortable with the way the market dynamics are working. Thanks for the question.
Okay, thank you very much, Ian.
Thanks, everyone.